Hey everyone, welcome back to Corporate Decoder. Today V.I.S.N just filed an 8K announcing an additional share repurchase program, and I am seeing a clear message about confidence in their stock. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially telling the market they think their own stock is a good buy right now. So what is happening here is that Vistance Networks Incorporated announced on the 26th of August 2026 that their board of directors has approved a new plan to buy back more of their own stock. This is not their first buyback. They had previously announced a $100 million repurchase program back in April 2026. Now, they're adding another $150 million to that. So in total, they've authorized a significant amount of money to go back into buying their own shares. Why would a company do this? Well, it is often seen as a sign of strength. It suggests that management believes the company's stock is undervalued, meaning they think it is worth more than what it is currently trading for on the stock market. By buying back shares, they reduce the number of shares available, which can increase earnings per share and signal confidence to investors. They're telling us how they plan to do this. They'll be buying shares through regular market transactions or private deals. They might also use something called Rule 10b-18 and Rule 10b5-1 plans. Don't let those numbers scare you. Essentially, these are just rules and plans that help companies buy back their own stock in a way that is legal and orderly, and sometimes to make sure they don't accidentally move the stock price too much while they're buying. This is a really important point. While they've authorized a lot of money, they aren't forced to spend it all. They can change, pause, or stop the buyback program whenever they want. It all depends on things like how much cash they have, what the market looks like, and if there are better ways to use that money, like investing in new projects or paying down debt. Now, to get a clearer picture of a company's financial health and potential risks, I rely on a really powerful tool. It provides a live companion report page for every stock we cover, which is constantly updated. This page distills complex information into easy to understand scores like a risk index, flags red flags directly from filings with citations, tracks how fast shares are being issued, and shows recent insider trades. You can find the direct link in the description and the pinned comment so you can check it out while rewatching. So with that out of the way, back to the filing. Looking at Vistance Networks Incorporated, also known by its ticker symbol V.I.S.N, they are listed on the NASDAQ. Their stock was trading around $11.63 recently, with a market capitalization of about $2.7 billion. They have around 4,500 employees. This new buyback program, totaling $250 million when you combine the old and new authorizations, is a significant move for a company of this size. The news of this buyback has already had an impact, with headlines on the 27th of August 2026 showing their shares surging by over 5%. This shows how positively the market is reacting to the company's decision to invest in itself. It is interesting that one of the headlines highlights that they don't have to spend the money. This reinforces the idea that it is a strategic move, not a mandatory one. It gives them flexibility, but it also means investors should keep an eye on whether they actually follow through with these repurchases and how much they buy. When we look at who owns the company, major players like BlackRock Incorporated hold a substantial stake of over 10%. This means that large institutions are watching Vistance Networks closely, and their confidence signaled by this buyback could influence other investors. So, what is the story here? Vistance Networks Incorporated is putting its money where its mouth is. By authorizing a large share repurchase program, they are sending a strong signal to the market that they believe their stock is a good investment. This move can boost shareholder value by reducing the number of outstanding shares and increasing earnings per share, while they have the flexibility to adjust or halt the program. The initial announcement is a positive sign for investors who believe in the company's future. The market's quick positive reaction reinforces this sentiment. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.